I'll first begin with a roundup of the data that has been put out by AMFI. My colleague Jayesh Khalani, as always, joining us. Jayesh, look at the inflows, the outflows. What's the kind of trend that you've seen? If February was a bit disappointing, is there a trend reversal in March?
Certainly looks like, but finally, some positive data as far as the mutual fund industry is concerned. Let me just run you through the numbers first. Though we did see the overall outflow number in excess of about 20,000 odd crores, which was also the second straight month of outflow for the entire industry, largely led by the liquid and the money market category. But the experts that I have been talking to over the phone lines, they're saying that not to read much into this, because this is a general phenomenon that happens at every quarter end. But what is more enthusing was the fact that equity flows this time around more than doubled for itself, at more than 11,500 crores. And in fact snapped its 4-month declining streak. Also the equity inflow that came in at about 11,750 crores, that was the highest number that we saw since October 2018. Now, what was not enthusing to the market was the balance fund category, because that saw a third straight month of outflow to the tune of about 3,000 odd crores. And from the historical data that is available, this is the biggest sell number or the outflow number for the balanced fund category. But ELSS funds also, they are in focus during the year end. That also doubled for itself, nearly 3,000 crores clocked in for itself. As far as the AUM is concerned, the total AUM, that also came in at about 23.5 lakh odd crores. But the equity AUM hit a lifetime high of about 8.4 lakh crores. Which was up about 8.5% and gained the most since March 2016. So, these are some of the basic numbers that we had from AMFI. But I believe that Ashish Somaya from Motilal Oswal AMC also joins us on the line. Ashish, first reaction on the net inflow number that we have got this time around, extremely enthusing, or one can say that the financial year, at least, that was ended on a high note. How are you reading into these numbers at the moment?
Yeah, so I think each of the three categories that you narrated, which is basically equity, ELSS and balanced, I would look at all of them, all three of them separately. So balanced fund continues to be a point of concern, because like you rightly pointed out, 3,000 crore net outflow, and anywhere between 65 to 70% or 75% of these funds is actually deployed in equity. So balanced funds having a 3,000 crore net outflow clearly is not a good sign. And like we've discussed in the past, I think it's the recency bias which actually kind of comes into play, because a lot of people think that balanced funds should have a bit more stable kind of performance, whereas in the last 1 year, there are a few balanced funds which at a point in time had a net negative kind of return, and that has caused some disappointment out there. But I think coming on to ELSS, it's a year-end phenomena. I think in February we had a 1,100 crore net flow in ELSS, and in March it's about 2,750 crore kind of number. So that is a year-end tax planning kind of phenomena, and it's quite natural for those numbers to get bumped up when we hit the end of the year. And equity, I think there is not a big trend change, because we are about, say, 9,000 crore net flow is a good number. I would want to kind of wait and watch over the next couple of months to basically make out a strong, positive trend out of this actually.
Ashish, just wanted to highlight that this time around the equity flows have seen a turnaround. The equity AUM, that has touched a record high of about 8.4 lakh crores. But that has really not translated into the SIP number, because that has seen a dip of about, it's just a marginal dip of about 50 odd crores. But given the fact that there was, underlying momentum in the equity market as well for the month of March, one would have expected that the SIP book would definitely have been higher. How would you read into the SIP book at this time?
No, I don't think, look, SIP, it depends on what is the experience of people. So if you started an SIP a year back, 2 years back, 3 years back, whenever you started your SIP, what kind of highs and lows, what kind of volatility the NAVs have displayed, that is what would determine your SIP experience. So 1 month of market performance, and in fact, like you pointed out, it is a 50 crore negative, which means that more number of people have cancelled their SIPs rather than the number of people who have actually registered new SIPs. And that's why I said precisely it has nothing to do with the March behavior of the market. It has got more to do with what kind of experience people had in the last year or couple of years while living with their SIPs. The other important thing which I would like to highlight, generally speaking, if somebody invested 100 rupees and the value at some point in time becomes 85 or 90, now when the values recoup and you again come to 100, for a lot of people there is a tendency to first bolt for the door and take the principal out, because they've just experienced a scenario where the principal was underwater, and now when they see the principal restored, there will be some people who instinctively might want to withdraw. That's the reason why I said that I would wait and watch for the next couple of months to declare any kind of a winning trend out of this. But yes, clearly I'm happy to see that the numbers are better than February.
Sure, Ashish, we'll let you go on that note, but thanks for taking the time out and speaking with ET now.